Mm. Okay, so I hope my voice is clear to everyone. Um, in this video, we are going to solve some questions related to the topic named bad debts. Um, as I taught you the topic in the previous video, I taught you some double entries, some formulas. All right, we will apply all that in the questions. We will solve 5 to 6 questions on the sample basis, and I want you to solve the remaining questions yourself. And if you get any doubts in Kaplan VBPKit or even in the study hub, you can feel free to contact me on my WhatsApp number. So first of all, let's start with the question 169. This is the Kaplan kit, and the kit that I have. This is question number 169. New well receivables. All right. So first of all, for question 169, let's read the requirement. What is the charge to the statement of profit and loss in respect of above information? So they are asking that what will we charge in the statement of profit and loss? All right. So if you remember in my last lecture, I taught you that what is the formula if the question states what will we charge in profit and loss. I taught you the formula. We will use the formula bad debts minus difference in allowance, right? Here was our formula bad debts minus difference in allowance here, right? So this one. What will we charge in profit and loss? We will use the formula bad debts minus difference in allowance. So let's solve the question. Let's solve the question 169 using this formula. Let's solve it here. Question number 169. First of all, I want you guys to stop the video here and try this question yourself. If you are not able to solve the question, come back to the video and solve with me, right? So, assuming that you tried the question yourself, so now let's solve question 169. They asked you what will we charge in the profit and loss. Alright, so whenever you are asked about the profit and loss charge, you will use the formula bad debt minus difference in allowance. And what is the formula for difference in allowance? As we discussed earlier, the formula for difference in allowance is opening allowance minus closing allowance. Alright. So simply we need to um, apply this formula now. So first of all, let's see in the question what is the amount of opening allowance in the question and what is the amount of closing allowance in the question. All right. Okay, let's come back to the question. Okay, so let's read the question. New will receivable ledger control account shows a balance at end of the year 58,200 before making the following adjustments. All right. Number one, Newell decides to write off bad debts amounting to 8,900. So the amount of bad debts is 8,900. All right. So if we are going to mention this here, the amount of bad debts is 8,900. All right. Then let's read the question. Number two, he also decides to make a specific allowance. So now he's going to talk about the allowance. So he also decides to make a specific allowance for Carol debt of 1350, Jeff debt of 750, and Mary debt of 1416. All right. So these are the specific allowances given of all three customers. And after that, he says that new win allowance for receivable at previous year end was 5650. All right. So there are two allowances given in the question. One of the allowance is this. He said that new allowance for receivable at the previous year end was 5650. Now we need to figure it out that this 5650 is our opening allowance or is this our closing allowance? We need to figure this out. So as it says in the question that 5650 was the allowance at previous year end. This means that the end of previous year is the start of this year, right? Like for example, in December 2022, the year end allowance was 5650. So at the start of the new year, in January 2023, the allowance will be same 5650. So always it is like that anything like allowance for previous year end, if it was 5650, for this opening year this is gonna be 5650, right? So for this year opening allowance is 5650 because for previous year it was closing allowance at the end of year. So for this year at the start of year this is gonna be opening allowance. So 5650 is our opening allowance. That's how we identify. All right, so first of all we write here opening allowance is 5650, and now we figure out what is the closing allowance. So obviously, if this one is 5650 is opening allowance, so the allowances given here for specific customers are obviously our closing allowances, right? So if we make the total 1350, 750 and 1416, what will be the total closing allowance? Let's calculate. 1350, 750, 1416. 1350 plus 1416 plus 750. So how much is this? 3516 is our closing allowance, right? 3516 is our closing allowance. Let's check the figures again. 1350, 750 and 1416. All right. Mm. So opening allowance was 5650. How we identified, I clearly mentioned that. And closing allowance is 3516. Bad debts are 8900 as mentioned in the question. Now let's apply the formula to charge in statement of profit and loss. Bad debts minus difference in allowance. So our bad debts were 8900, and the difference in allowance. Oh, we forgot to calculate the difference in allowance. Let's calculate the difference in allowance here. Difference in allowance, and the formula for difference in allowance is opening allowance 5650 minus the closing allowance 3516. So this is 2134. 2134 is our difference in allowance. All right. So we will use this here in the formula. Bad debts minus difference in allowance. So bad debts were 8900 and minus the difference in allowance, which was 2134. So you get the answer 6766. This is the amount he will charge in the statement of profit and loss using the formula bad debts minus difference in allowance. See how easy it is. We just applied the formula and we got the answer. 6766 is our right answer. So option number A is our right answer. Let's move on to the next question. Question number 170. In the question 170, it states that what are the final amounts for inclusion in statement of financial position at year end? Year end is 30 June 2006. All right. So what should we include in statement of financial position? All right. So if you remember, I taught you that always and always we include net receivable in statement of financial position. All right. We include net receivable in statement of financial position. So question number 170. All right, question number 170. If we look for the formula of net receivable, so that was our formula, right? If we copy this formula and paste it here, so Net receivable formula is gross receivable minus actual bad debt minus closing allowance. So in this question, let's read the question now. At 1 July 2005, V Company's allowance for receivable was 48,000. All right. V Company allowance for receivable was 48,000 at 1 July. He gives the date here. So if the 30 June 2006 is our year end, so our year when our year is starting, obviously at 1 July 2005, our year is starting, right? So at the start of the year, our allowance for receivable was 48,000. This means that this is your opening allowance, right? This is your opening allowance. Then he states that at 30 June 2006, trade receivable amounted to 838,000. All right. At the year end, our receivables were 838,000. All right. And it was decided to write off 72,000 of the debts. 72,000 is our bad debts. All right. 72,000 is our bad debt. And it says that and adjust the specific allowance for receivable to 60,000. All right. So our allowance for receivable is 60,000, bad debt is 70,000, and receivables are 838,000. All right. So as you all know that at 1 July, our opening allowance was 48,000. All right. Because 1 July 2005 is start of the year, right? So the allowance was 48,000 at the start of the year. It states, right? So if this was 48,000 was the opening allowance, if 48,000 was the opening allowance, so what will be our closing allowance? 60,000 will be our closing allowance. That's how I figure out, because they told us the date, right? That at the start of the year, at 1 July 2005, our opening allowance was 48,000. They said that. All right. So this means that another allowance given in the question will be automatically our closing allowance, right? So 48,000 is our opening allowance and 60,000 is our closing allowance. And 838,000 is our gross receivable, all right? Because allowance is not deducted, bad debts are not deducted from this. So this is our gross receivables, right? And these are our bad debts. Now let's use the formula to calculate what should we include in the statement of financial position. Let's apply the formula. Okay, so as our gross receivables were 838,000 in the question. Um, bad debts were 72,000, right? And our closing allowance was 60,000. All right, so we will apply the formula for net receivables. Our net receivables will be gross receivables minus actual bad debt minus closing allowance. So what answer do we get? Is 706,000. This is our final answer. This will be included in statement of financial position at the year end. All right. So 706,000. This option number B is the right answer. All right. 766 is the 838,000 minus the 838,000 minus the bad debts, and then allowance for receivables, closing allowance 60,000, and you get the net receivables 706,000. All right, so this is your final answer. Hope this is clear to all of you. Now let's move on to the next question. Question number 171. Question number 171. What's the requirement? What are what was the irrecoverable debt expense for the year? They are asking the expense for the year, means they are asking what will you charge in the profit and loss, right? Because bad debt expenses charged in profit and loss, right? So they are asking about profit and loss. So what formula do we use for profit and loss? We use bad debts minus difference in allowance, right? So now let's come back to the question and read the question. Okay, so in the year ended 30 September 2008, Fauntleroy had sales of 7,000. The year-end receivables amounted to 5% of annual sales. All right. The year-end is, he told us that sales are 7,000, and the year-end receivable amounted to 5% of annual sales. So if we want to calculate the year-end receivables, it is 5% multiplied 7,000. So let's calculate the year-end receivables here. Right. Do we even need to calculate that? Yes, let's calculate the year-end receivables. In the question, they told us that they are 5% of the sales. So sales was 7,000. So 5% multiply 7,000. This is 350,000 is our year-end receivable. All right. So now let's move to the question. At the year-end, Fontria specific allowance for receivable equated to 4% of receivables. All right, and they say that at the year end, this means the year end allowance is 4% of receivables. All right, at the year end, 4% of receivables was the allowance. So we got to know the closing allowance here. And all this in the question that 4% is the allowance at the year end. This means this is our closing allowance. Closing allowance is how much? It's 4%. 4% of receivables. All right, so 14,000 is our closing allowance. Now let's move on to the question. He also identified that this amount was 20% higher than at previous year end. All right, he also identified that this amount was 20% higher than at previous year end. Okay, so what does this mean now? He is saying us that 14,000 was our closing allowance. As you all know, 14,000 was our closing allowance. So he is saying that this amount, this 14,000, is basically 20% higher than at the previous year end. And, and that means that uh, the amount at the previous year end was 20% less than this, right? Like it was 20% less than the 14,000. As I told you in the previous questions, we saw the question above, in which question number 169, I told you that the previous year end means the allowance at previous year end means, for example, at December 22, the allowance, for example, it was 1,000. So for January 2023, at the start of the year, the allowance is going to be 1,000. All right. The previous year closing allowance will be the opening allowance for the starting of the next year, right? So that's what he mean to say that um, our opening allowance is 20% less than this 14,000. That's what he mean. All right, because at previous year end he stated that this 14,000 is 20% higher than at previous year end. This in another way, this means that at the previous year end uh, it was 20% less than the 14,000. So how do we solve for the opening allowance? We say that 14,000 is our 100. Sorry, 14,000 is our 120%, and we need 20% less. We need 100%. All right, 14,000 is our 120%, and we need 20% less, which means we need 100%. So that's how we calculate our opening allowance. All right. opening allowance will be 11666 because at previous year closing allowance was 11666 and this year opening allowance is 11666. All right. Okay. So now we got the opening allowance and closing allowance. Now let's see. During the year irrecoverable debts amounting to 3200 were written off and debts amounting to 450 were previously recovered. Sorry. During the year, irrecoverable bad debts amounting to 3200 were written off and debts amounting to 450 and previously written off were recovered. This means how much is our actual bad debt? How much is our actual bad debt? We need to always see the actual bad debt. So 3200 was written off, but 450 was recovered. So what will be the actual bad debt? 3200 minus 450. All right. So actual bad debt is 3200 minus 450. All right. So 2750 is our actual bad debt. Now using the formula, what will we do is we need to, okay, what is the amount of difference in allowance? As we calculated, the opening allowance is 11666.67. All right, 66.67 minus the closing allowance 14,000. So our difference in allowance is minus 2333.33. All right, minus 2333.33 is our difference in allowance. Now we need to put the values in the main formula. So our bad debts was 2750 and we subtract minus, we will use in the brackets because this is the value in the minus sign, so minus 2 3 bracket close, and we get 5083 as our answer. So let's see, option number A is our answer. All right, we just applied the formula. We had the closing allowance in the question. We calculated the closing allowance was 4% in the question, and then he stated that at the previous year end the allowance was 20% less than the 14,000. So the previous year end closing allowance means the opening allowance at the start of this year. All right, so we calculated 14,000 divided by 120 multiplied 100 because 14,000 was 120% and we needed 20% less, we needed 100%. So we calculated as 11666.67 opening allowance, and then we found out the actual bad debt was 2750. Then we calculated difference in allowance by opening allowance minus closing allowance minus closing allowance. We got the negative answer, and then we applied it in the formula. We got the answer 5083. Right? We got the answer 5083. I hope this question is clear to you. Now we move on to the next question. Let's solve 3 more questions. Okay, so question number 173 is a simple. They are asking you the double entry. So G company has been notified that customer has been declared bankrupt. G company had previously made allowance for this receivable. All right, which of the following is the correct double entry? Okay, so previously they made an allowance for receivable. What does this mean? What does this mean? This means that I taught you in the notes that if you see here, okay, so previously they made the allowance. This means that previously they made this entry, debit, bad debt, and credit allowance. This one, right? This one. Previously, the management made this entry, debit, bad debt, and credit allowance. But now they are saying that, uh, G company has been notified that They are told that customer has been declared bankrupt. Now they are confirmed that bad debt actually happened. So now when the bad debt actually happens, if really bad debt happens, what did we studied is that if the real bad debt happens after making the allowance for receivable, so we need to cancel out the allowance for receivable. To cancel out the allowance for receivable, we need to debit the allowance for receivable and credit the receivables, right? So what is the correct answer? What is the correct answer out of these ones? Um, this one. All right. Allowance for receivable debit and credit receivable. All right. There is a small mistake in here. They actually ask you the entry for bad debt that we will pass this double entry allowance for receivable debit and credit receivable, but we will do this separately. The main entry we need to record for bad debt is bad debt debit and credit receivable. This one, the one we studied here, when the bad debts were confirmed, the question states that the customer was declared bankrupt. So we were confirmed that bad debt has happened. So what entry do we need to pass? Debit, bad debt, and credit receivable. That's why our answer is C and not A. You will pass the this double entry, but you need to do this separately. But here in this question, they need the double entry for when the bad debts were confirmed that the customer was declared bankrupt. So debit, bad debt, and credit receivables. All right. I'm sorry for the confusion, but this is the right answer, as explained you. Okay, so now let's move on to the next question. Question number 175. If you will solve question number 175. Mhm. Okay, so how we are going to solve this question 175? What is the requirement? First of all, they are asking us how will the profit for the period be affected by the change in allowance, all right? Okay, now first of all, let's read the question. The sales revenue was 2 million and its receivable were 5%. So let's solve this question. Question 175. Sales revenue was 2 million. This means 2 million. This were our sales. And our receivables were how much? 5% of the sales. These are our receivables. Alright. Then it says that J company wishes to have a specific allowance for receivable of 4,000, which would make the allowance one third higher than the current allowance. Alright. So this 4,000 is one third higher than the current allowance. Alright. Now what does this mean? Okay. So now what is the current allowance? If this 4,000 is uh, a J company wishes to have a specific allowance for a sale of 4,000, which would make the allowance one third higher than current allowance. Means this 4,000 is one third higher. Alright. This 4,000 is one third higher. This means that we need to calculate what was the current allowance. So we calculate it here. Wait, Our current allowance, how do we calculate? 4,000 is our previous allowance, all right? Sorry, 4,000 is our previous allowance, and what will be the current allowance? It will be 3 by 4, all right? 3,000 is our current allowance. So if 3,000 is our current allowance and 4,000 current allowance means opening allowance, 3,000 was our um, current allowance and 4,000 was our later allowance, like the one that their company wishes to make. So 3,000 was our current allowance and 4,000 is now our allowance. All right. So what is the difference between the allowance? Um, it became from 3,000, it became 4,000. So this means that there is an increase in allowance, right? Because 3,000 was our current allowance and we moved to 4,000. We made the allowance 4,000 on the wish of their company. So there is an increase in allowance by 1,000. So when there is an increase in allowance by 1,000, so obviously, as we studied that if the if we are increasing the allowance, if we are increasing the allowance, our profit and receivable will decrease. We studied this here. If the allowance is increasing, net profit will decrease and receivable will decrease by 1,000. All right. So this will be our answer. Answer A is our answer. All right. Option A. Okay. So why did we calculate our current allowance as 3,000? How did we calculate? Because why did we multiply 4,000 with 3 by 4? The reason here is being that in the question they stated that 4,000 is which would make the allowance 100 higher than the current allowance. Means 4,000 is our 3 by 4. All right, because it is making allowance 100 higher than the current allowance. So this means that 4,000 is our 3 by 4. And this is the reason that we multiplied 4,000 with 3 by 4 and we got the current allowance as 3,000. All right. So our answer is A for 175. Hope this is clear to all of you. Okay, so question number 176, very easy question. This is gonna be last question we are going to solve. If you got doubts in any further questions, you can contact later to me on my WhatsApp number. All right. So they are asking, what is the charge to settle a profit and loss? All right. What is the charge to profit and loss? So we know the formula for profit and loss: bad debts minus difference in allowance. All right. Bad debts minus difference in allowance. So how many bad debts in the question? Okay. Abacus company started the year with total receivable 87,000 and allowance for receivable was 2,500. Means they said that at the start of the year the allowance was 2,500. This means that this is the opening allowance. So our opening allowance is 2,500. All right. Okay. During the year, two specific debts were written off, 800 and 550. Alright. A debt of 350 that had been written off as irrecoverable in the previous year was paid during the year. This means that this actually means that 350 debt was recovered. Alright. So how much will be the actual bad debt? Actual bad debt will be 800 plus 550 minus the 350 which was recovered. So let's calculate actual bad debt. Actual bad debt 800 plus 550 minus how much was recovered? 350 was recovered, right? So actual bad debt is 1,000. All right. So at the year end, total receivable was 90,000 and allowance for receivable was 2,300. They are stating that at the year end, the allowance for receivable was 2,300, means the closing allowance was 2,300. So the closing allowance is 2,300. So we just need to apply the formula now, obviously. So how much is our difference in allowance? Difference in allowance is opening allowance minus closing allowance always. So 200 is our difference in allowance. Actual bad debt is 1000 and 200 is our difference in allowance. We get the answer 800. Alright, so option number A is our answer. Alright, so I hope this video was helpful. Any improvements you would like to suggest, you can WhatsApp me at my number, or for any guidance related to this topic or any other topic, feel free to contact on my WhatsApp number. Thank you so much.